Yep, it is down on the open, Bob. Hey, good morning, everybody. Welcome to the Option Pit Morning Volatility Report. I just got a note from somebody, Bob, here saying TLT down on the opening. Yes, it is. You should. Did you did you trade out of some of the calls on Friday? Then you'd be doing extremely well. Good. All right. Anyway, that's just one of our clients. Anyway, so welcome to the Morning Vol Report. This is our store, right? Where you have a chance to pop in and look at all the stuff we have available. This is my courses and this is the store. These are some of the things you can buy. And of course, what we do at Option Pit is every month we give our members basically more content on more subjects that they find interesting. So check us out over at our mentoring services page at optionpit/mentoring. And again, you could start anything just as small as just buying one of our courses in the store. And if you like what we do, there's plenty more for you out there. Now with that, what do we got? I'm just going to show you. It is dead. Might be worth buying in some of the short calls yet. I'm not ready quite yet, Frank. I almost did it yesterday, but I avoided it. We'll take a look at that in our regular chat session. All right. So this is, I thought, one of the more interesting charts here today. I'm in Chicago with Mark on our once or twice a year get together. Notice though a couple of things: December 14th, and then today. So yesterday, I was when I was about to put a blog in last night, but of you had some of the December. Here's, I believe, right. Here's our DEIS. Here's our Jan contract. The DEIS is tied to the cash, right? So you almost forget about that. But note how the Jan started slipping down relative to everything else. So, you know, the market definitely is pricing in, or at least I think anyway, starting to price in sort of life after whatever this Fed announcement is. Meaning there should be some rate regime. Who knows? Market seems to be pricing in that they're going to rise no matter what. That probably afterward, I think, will bring down volatility significantly into the end of the year. The rest of the market, though, at least we'll just call it from the elevated level of volatility, right? So if we go to VIX, okay, from somewhere here to maybe somewhere back down in here to this range, maybe 15, somewhere kind of where it was trading prior to this. When oil was sliding down, it seems that like really low levels of volatility just aren't going to happen for us. Like 12, 13 VIX, I think is going to be difficult. Mostly if you attached USO directly to SPX, I mean, they're almost moving 1-to-1 at this point. So this a little bit more extreme vol we had was on some worries about the high yield market. It looks like the market, things are backing off a little bit as more information comes out about that. So trades, I think, are interesting. I think we're still in a high gamma situation, right? Where the market can move significantly, on the order of 1.5 to 2%. You could see 2010 on the SPY again this week. If actually the Fed doesn't raise and waffles more and is more uncertain, I think we'll break 200 in the SPY on the downside. So either way, we're pricing for a heavy move, and I think that's what we're going to get one way or the other. So if the Fed surprises everybody in a bad way, and I think that means by doing nothing for rates, I think the equity market's going to have a hard time. Even with that, volatility is pricing that in already. So that might be a good time to again go in and try to sell some volatility. The market's just going to stay weak without any direction. Who knows? Who knows where the bottom would be at that point? I really can't even speculate, because at this point, if the Fed just looks like waffles, the market's basically going to eat that for breakfast and not like it very much. All right, so I'll see the rest of you in the chat room today. Option Pit has a slightly reduced schedule, But we'll see you all nonetheless this morning. You all have a good day. Bye-bye.